focus to the top story that will be dominating even Times of India as well as Economic Times. And there you go. This is about the 45-year peace along China border that has been shattered. I will read directly off the newspaper for you. It was worst clash in decades that took place on Monday night. Some Indian soldiers are still missing. Chinese troops also said to have suffered casualties. Soldiers from People's Liberation Army attacked Indians with spiked sticks and stones. Officers among 20 Indian troops that have actually been killed in the Ladakh confrontation. The tensions along the China border spiked to the highest in nearly 5 decades after 20 Indian military personnel, including a colonel rank officer, were killed in Galwan Valley that has seen a 6-week-long standoff with People's Liberation Army. Sources told Economic Times that the toll could rise as some soldiers were severely injured and some others had not been accounted for after PLA troops attacked with spiked sticks and stones. So a cause of concern. You saw even the markets react to that yesterday, and definitely a worse clash coming in decades between India and China. 45-year peace along China border shattered. You have officer among 20 Indian troops that are killed in Ladakh confrontation. Shift to another story that's there actually related to this in the front page of the Economic Times, and this is the story that I'm going to talk about. And the headline reads as, "Is this Hindi-Chini bye-bye on trade front?" But not really. No immediate impact likely on the business relations. That's the word coming in from the government officials. This is a story filed by my colleagues in the Economic Times. That is Kritika Suneja as well as Surbhi Agarwal, and goes on to say that India's border tensions with China may not have an immediate impact on business and trade relations. This is as per multiple government officials. There is currently no thought of extending the confrontation to the economic realm. A number of them told Economic Times. Industry representatives echoed this view, saying that both sides need to contain the dispute and not allow it to escalate. China had a surplus of about $45 billion in trade with India in the first 11 months of FY20. Small retailers have called for a boycott of goods made in China and the promotion of local products instead to reduce this gap. And also, we will not target any country based on border conditions as it is not proper to link the two. This is as per an official. So there you go. Traders have called for the boycotts of Chinese imports. CEAT wants to reduce dependence by 1 lakh crore by December 21. India already has a plan to reduce unnecessary import, but they're not keen on APTA engagement. So this is the other story that's there on the Economic Times that is talking about the trade front, and government official is saying that there's no immediate impact likely on business relations. Alright, another story related to the similar front, and it is also again there on the front page of Economic Times, and this is what it is talking about. It is India may cut telecom and IT reliance on China. Focus on Huawei ZTE for 5G play in view of security concerns. Chinese course Huawei and ZTE have India's nod for 5G trials, but their role in its rollout here is not decided yet. The skirmishes on the China border and the global backlash against the neighboring country over COVID-19 outbreak may lead to a rethink of India's strategy on information and communications tech, that's ICT, especially from the security point of view with the 5G at the core, that is as per the top government official. They're also saying this hostility is likely to create a rethink about India's manufacturing dependence on China. As per government officials, this is what they've told Economic Times. Also, there is a more compelling need to revisit the security architecture. The heightened tensions has put focus on the issue of allowing Chinese telecom equipment firms such as Huawei and ZTE in India's 5G rollout. So this is another important story relating to what's happening around that India may cut telecom and IT reliance on China. Let me now quickly flip my page to page 2, where you have another story that's actually grabbing almost half of the paper, or half of the page 2 rather. And this is what the story is all about, that the armed forces to stock up war reserves. This is the story that I'm going to talk about. I'll directly read it off the newspaper. So armed emergency procurement powers given to the forces, navies is allowed to deploy assets near Malacca Strait, Indo-Pacific. Armed forces to stock up war reserves. Also fighters to move to forward locations. Indian camp first felt signs of discomfort when Chinese pressed for another round of corps commander level meeting in Pangong. So this is exactly what the story is all about. The government has given powers to the armed forces to make emergency procurements to stock up its war reserves in the wake of the escalating conflicts with China along the line of actual control. While India has initiated dialogue to contain the conflict in Ladakh, that's what the sources are saying, the government did not want to leave anything to chance at this stage, especially after the violence on Monday night. Economic Times has learned the Chief of Defence Staff, that is CDS, General Bipin Rawat, has asked to coordinate with the three services on prioritizing the requirements where necessary. So this is a big story that is coming in, that this morning for all of us, that emergency procurement powers are given to the forces, armed forces, to stock up the war reserves. So the government does not want to take any chances and already has given emergency procurement powers to the armed forces. And let me shift focus now to another story that's there on page 8 of Economic Times, that is Great Wall set to invest $1 billion in Maharashtra. But let me, for all the details on the story, I'm joined by my colleague Utkarsh Chaturvedi. Utkarsh, good morning. Take us through the story that's there on the Economic Times this morning.
Exactly. This is what is being announced by the Maharashtra government a couple of days back about the kind of investments they have been promised, which includes investments by BK Photon, again a Chinese firm, and Great Wall. Now, we all remember the Great Wall had already announced its entry into the country, and they were looking for a manufacturing plant for a very long time. In fact, in the Auto Expo, Great Wall showcased the kind of vehicles they are about to come, they're about to enter and with, and they were looking for a plant. Now, Maharashtra is what they have zeroed it on. If you look at let me give you some perspective on how big Great Wall is. In India, at some point of time, we sell 2 million vehicles on an average, 2 million cars every year. If you look at Great Wall, an average of what they make is about 6 to 7 million in China. So the economy of scale which Great Wall has is quite huge. It's a great SUV maker in the Chinese markets. And now they have decided to come in, and Maharashtra is what they have chosen. Speaking about BK Photon, that kind of investment, we have been hearing of BK Photon investing in the Indian market for a very, very, very long time. This takes me back to almost 6-7 years in my reporting career, when I've been hearing that BK Photon will be investing, which has not happened. Again, we'll have to take these announcements a bit, we have to wait and watch when it comes to these announcements, because till the time they don't get made is when you have to really see once the investments are finalized. But yes, Great Wall, SAIC MG, and if BK Photon comes and invest, you will have many Chinese automakers also entering the Indian market as well.
All right, thank you, Utkarsh, for taking us through that story this morning. Let's move on now. Let's shift focus to a story that's there on the page 10 of Economic Times, and this is the story that my colleague Vivek Iyer will be talking about in a short while from now. FPIs may quit Hong Kong, take Singapore route for India play. Vivek, tell us why are they planning to do such a move, quit Hong Kong and rather come into India via Singapore?
Well, good morning. So what's actually happening, and this has been happening since yesterday, is that number one, a lot of escalating tensions between India and China, and this is not only on the border front, but also you also saw a couple of months ago about how you actually saw People's Bank of China taking stake in some of the Indian listed banking entities. So now, on the back of that particular development, especially, you saw some amount of stake being bought by Chinese companies in HDFC Group. So the government said that any kind of investment being made by Chinese companies in the Indian market would have to go through a lot of hurdles or a lot of checks before they would be allowed to do that. So given the fact that there could be increased regulatory oversight, what the ET is reporting today is that most of the FPIs, in order to overcome that particular hurdle, may quit the Hong Kong route and rather choose to use the Singapore route. Now remember, the Singapore route is slightly easier given the fact that you already have the Nifty futures or the Nifty derivatives trading over there. The other thing that you need to keep an eye out for is the fact that Singapore has been offering a stable regime for FPI investees in India, and also 11% share of Singapore is the kind of share that Singapore has as far as FPI force already is concerned, which is the third largest. So a stable regime as well as ease of investing is something that would attract Chinese or Hong Kong investors to actually choose over Hong Kong and move to Singapore.
All right, thank you, Vivek, for getting us that story this morning. Let's shift focus now to a story that's there on page 3, and this is regarding the Prime Minister's State Chief Minister's meeting. Remember, it is a two-part meeting. Yesterday, the Prime Minister met a certain set of chief ministers. Today, he's going to meet about 15 chief ministers that are slated to attend the PM's meeting, and out of that, 6 of the CMs will be speaking today. On day 1 of PM-CM's video conference, citing the Punjab example, Prime Minister says that the states must adopt micro-containment and house-to-house surveillance strategy. He also goes on to say that the green shoots in the economy are now visible and economic activity needs to be increased. He was speaking to the state chief ministers to review the first 2 weeks of the unlock phase 1. Prime Minister also said the COVID-19 danger was not over and there was a need to maintain social distancing norm. He also called upon the Chief Minister to impress upon people for the importance of wearing the mask, social distancing as well as hand hygiene. Out of today, which are the Chief Ministers that are slated to speak? You have the Chief Minister of Maharashtra, that's Uddhav Thackeray, UP CM Yogi Adityanath. You have Palaniswamy, you have Nitish Kumar, as well as K. Chandrasekhar Rao and B.S. Yediyurappa, who are all slated to speak at today's meeting with the Prime Minister. So if you see, today is that second day 2 of PM-CM meeting. We should focus to another piece of information that we are getting about the US Federal Reserve, the corporate bond buying, and how is it likely to boost the FPI inflows. To talk more on that, I will be joined by my colleague Jayesh Khilani. If you see, the story is on the ET markets, that's page 9 of the Economic Times. Jayesh, if I have you, take us through the story.
So what this actually means is that, firstly, this is in line with the U.S. measures, which is actually aimed at lifting the local economy through a dedicated corporate bond buying program that we, received a few days ago. What the market participants are actually hopeful that the rising cash pool now will actually trigger FPI inflows into debt and equities. And of course, the FIs will look for higher yielding countries in which, India should stand to benefit, because the rupee denominated assets which are likely to yield the higher on the higher side, at least by next calendar. What they are actually forecasting, or the local currency forecast suggests that the rupees total returns are estimated to be in excess of 9%, which puts India in the prime spot, because the other two countries where they are actually focusing on, China and Korea, Those two currencies are estimated to return in excess of 5.5% to about 4.5%. So India, in general has a natural advantage when you look at these numbers. So based on this, the market participants are anticipating that there could be a fresh round of inflow which would come into India because of this particular move. And of course, all of this is in line with the Trump team, which has actually put in $1 trillion for the infra push. So, we could look at some fresh inflows coming into India, especially the debt and the equity side.
All right, thank you, Jayesh, for taking us through that story this morning. But let's shift focus now to page 8 of Economic Times, and this is the story that I'm going to talk about. It's about Torrent Pharma and Reliance Infra. They're in talks for Delhi Discom deal. Reliance Infra is looking to sell a stake in 2 BSES companies. Greenko remains the only other contender. To talk more on the story and what are the details, I'm joined by my colleague Varun. Varun, what are the details of this story? A deal between Torrent and Reliance Infra, is it?
Right. Hi, Cheryl. Good morning. So basically, Anil Ambani has one very good power asset which is the one which you just mentioned, right? And that is the BSES, Rajdhani Power, BSES, Yamuna Power. Now, in this, he holds 51% and 49% is held with the Delhi government. He's been looking to sell it for a while, and like you mentioned, Greenko was the bidder, and there were numerous bidders for it, including Torrent Pharma. Now the race has kind of simplified, and there's only Torrent and Greenko who still stand. NL Groups has opted out of the bidding process. So the total equity value which they are targeting for this is around 5,000 crores. So that's including the debt. Some other PE players like CDPQ and KKR had also taken a look at this, but they don't seem to be interested anymore. So basically, it will help Anil Ambani to, pare down his debt by selling off these assets. And it's a fairly good asset. So cash-rich companies or like Torrent Power, for example, which has recently done quite well, specifically in the distribution part of its business, they can really put this kind of asset to good use. So that's broadly what the story is about.
All right, thank you, Varun, for taking us through this story and explaining the details of that particular deal, if it happens. Let's shift focus now and let's talk about a story that's there on page 11 of your Economic Times, and this is what I'm talking about. That is Finance Ministry nod to NHAI's 50,000 crore rupees SPV. The plan is the model to be finalized by June end, and appointment of merchant backer will be soon. This is as per officials, but to take us through more details of the story, I'm joined by my colleague Vinny. Vinny, good morning and take it away.
NHAI has received a nod from the finance minister to go ahead with its external financing route for around 50,000 crores SPV. Now, this is coming in at a very nice time for NHAI, and it's a positive move, especially when it's coming at a time when the government spending is muted. Long-term finances will also be made available to the company, so that's a positive move. Plus, SPV mode can be, replicated and for more projects as well. And this mode is also going to be utilized for greenfields projects, so this is quite a positive move. Now talking between Delhi and Mumbai, and this will all be funded, so this is a very positive move. So let's see how this actually works out and what is actually pans out with NHAI finally.
All right, thank you, Vinny, for taking us through the details of that particular story. But let me shift focus now to the top 5 headlines that's there on the Times of India this morning. And the first headline indeed is 20 soldiers die in worst China clash in 53 years. And that is the top headline coming in even on Times of India this morning. Let's shift focus now to COVID-19. India COVID-19 toll soars by over 2,000 in a day. Moving on, you have COVID testing ramped up to 3 lakh samples a day. Recovery rate is 52%. Now the focus is on reducing the deaths. And lastly, you have Taj Mansingh to become COVID facility. All right, and that is the top headlines that's coming in on the Times of India this morning for you. Let's shift focus now to a case that is all set to be heard today in the Supreme Court, that is the EMI moratorium case. For details and backgrounder on that, I'm joined by my colleague Abhimanyu Sharma. Abhimanyu, good morning. And what is this case all about?
The Supreme Court will hear a plea today seeking full waiver of interest on loans during the moratorium period. The banks have told RBI that they are opposing any waiver of interest since it will set a bad precedent and would also not be good for the health of banks. On the last date of hearing on the 12th of June, the top court had asked the Union Finance Ministry and RBI to hold joint meetings within 3 days on interest waiver. They had to decide whether interest was to be levied for deferred EMIs during the moratorium period. The top court had observed that they were not considering a full interest waiver but was only concerned about the interest postponement, which should not accrue any further interest. The top court's query was limited whether payment would impose interest on interest or not, and that is something on which the top court is likely to take a call today while considering the replies which would be filed by the Union Finance Ministry, the RBI and various banks.
Thank you, Abhimanyu, for taking us through the details of that particular case that is supposed to be heard today, and we will definitely be tracking that case closely on ET Now. And with that, we are out of time in this edition of the newspaper show. Thank you for watching.